these higher and higher prices are here to stay, and that's the challenge of the investor, to have to deal with this bold new world of aggressive government intervention in the economy. And where it heads is anyone's guess.
So, Mark, if we were to look at sort of the trend in nationalization, that's a word that we associate more with the socialism of yesteryear, the collectivism of the 1914 to 1944 period. Are we talking about capitalism having run its course, or is this a new version of capitalism? And does that capitalism start to remind us more of almost the fascism that we saw, where big business and big government are tied at the hip, very much like we saw in the 1930s and 40s in Germany?
Yeah, it's fascism. You use the term fascism, and I think it's a much more appropriate term than outright nationalization. I don't think the government wants to own a Bear Stearns or any of the commercial banks. They don't really want to own Fannie Mae and Freddie Mac. It's just that it's a form of regulation, it's a form of intervention, it's a form of bailout. All of those aspects suggest a fascist type of view where, yes, private enterprise in name only controls these assets, but it is a partnership with government in terms of government directing where they want assets to go and so forth. This is definitely a U.S. factor. Now, whether that is a factor that spreads overseas is another good question, because their free market economies have flourished and have expanded. You know, China, Asia, India, all of them have deregulated and moved toward a more capitalist, laissez-faire model, if you will, with some intervention and so forth. So they're moving in the opposite direction of previously being over heavy-handed, and now are allowing market forces to work more, while on our side, we're going toward more regulation and more control. So it's an interesting change in these patterns. And I think you have to look at each region of the world rather than just what happens in the U.S.
We've often looked at the 19th century belonging to Britain and the 20th century belonging to America, with the idea that perhaps the 21st century could belong to the Asian bloc, China, and that whole region. Mark, you went on a number of trips with us to the Orient in the early 90s, and certainly we saw growth emerging there. Is that really what we're looking at as we watch fascism grow here, greater controls here, greater deregulation there? Is this the final transition of power and influence from America to Asia?
And I've been back since the 90s several times to Asia. I went to China just a year or two ago to see firsthand the level of industrialization. I mean, they're creating a new city with 1 million people every day, and they're building 2 nuclear power plants, and they're saving money like crazy, and they're investing, and it's just a phenomenon that is something to witness firsthand, and which I think is very important for everybody to do. They are creating a military-industrial complex, however, and we need to be alert to that, which could be, because they're smart in terms of maintaining political control, with the communists still politically in control of China. They know that they have to be financially secure in order to do that. The problem is when you make people wealthy, then they're going to want political control at some point. So there could be some crisis down the road in China that could destabilize that region. We always have to be alert to that. But they certainly give every indication of being a major powerhouse. I'm not sure you can sell the U.S. short at this point, or even Europe. I mean, look at the European community, how the euro has been a very strong currency. So I don't think you can dismiss Europe either. But I see almost like the old Trilateral Commission concept of Asia, Europe, and the Americas all vying for power here.
Well, once again, you're listening to the McAlvany Weekly Commentary on McAlvany.com. That's spelled M-C-A-L-V-A-N-Y. And today we have our guest, Dr. Mark Skousen, who can be reached at freedomfest.com. That's FREEDOMFEST.com, or at 866-266-5101. Dr. Skousen, a question for the future of the dollar right now. We obviously don't have any backing to the dollar, and as the Federal Reserve continues to lower interest rates, we're no longer competitive with, as you had talked about, the euro and some of the other currencies. Do you feel like there's a change in the wind as far as currencies go over the next 2 to 3 years because of this bailout?
Well, there's certainly two factors at work here. And by the way, you mentioned my website, Freedom Fest, and that's a conference that I do every year, and I understand, David, you're going to be coming, and maybe your dad as well, and a few others. We're going to do a World Economic Summit at Freedom Fest that's going to deal with these very issues, and I call it kind of the anti-Davos conference, so it's an anti-establishment conference, but, we're even getting Steve Forbes there to highlight it. And the issue before us is this issue of the dollar. And I think there's two factors at work. Yes, from a short-term basis, the U.S. economy has been weak and interest rates have been lowered by the Federal Reserve. They've engaged again in easy money policy, and that's been negative for the dollar. But the other factor is just the creation of the euro as a world currency. And I think one of the reasons the euro has been so strong against the dollar is kind of a one-time catch-up by central banks, commercial banks, and other financial institutions to start carrying the euro on their books as an asset. And I don't think that can be duplicated for very much longer. From a purchasing power point of view, for anybody who's traveling abroad, my gosh, can the dollar get any weaker without causing an absolute crisis? I kind of think that it's time for the dollar to start rallying, and certainly if the Fed stops raising interest rates, which pray tell they will stop doing here, it's just crazy to keep lowering rates below what the Austrians call the natural rate of interest, the natural rate of between supply and demand to do business, and people's propensity to save. All of that, I think, suggests that Fed needs to get interest rates back up to a natural rate, which would be 3, 4, 5%, rather than this artificial low rate, which creates its own set of problems.
That's right. A couple of questions for